And for Malaysia, I'm also on the more cautious side. In terms of headline growth, I'm expecting a print of about 3.8%. I do think that's slightly lower than the government's forecast of 4 to 5%. Of course, I think there's some upside risk, especially if oil prices continue to recover and stay sustainable, some of the pickup in external growth to materialize by the moment. I'm slightly more cautious, partly because I'm a bit wary of one thing, of course, the sustainability of the consumer. To be very honest, I think the consumer has surprised me to the upside in last year, especially in Q3, right? Look at the consumption numbers. But I feel a lot comes from the one-off measures, right? Partly the minimum wage hikes, we have the voluntary cut in the pension contribution. So I think that provided a near-term boost to disposable income. Coming to this year, right, the tapering of those one-off measures, I also expect higher inflation and a slightly softer labour market. That will eat into real wage growth, right? So I do think on the consumption side, it may actually slow down downwards closer towards a 5% year-on-year rather than the above 6% year-on-year at the moment. So between 5 to 5.5% year-on-year. Investments, well, generally for Malaysia, I think private investments, there's been some support, right, on the construction side. Construction sector still do well, but I think on the fiscal side, right, development expenditure, we saw in the last budget clearly somewhat constrained there, down to about 3.4% of GDP from 3.6% of GDP.